Hi everybody. Good afternoon. So, like, Manish Soni from Tax Mantra, and we are going to start a new webinar today about GST refund and the technicalities and the practical problems that we face while filing the refund, and the easier process on how we should follow to claim the refunds. So I'll just give you some live and practical examples that we have been facing with our clients in regards to this GST refund, and how do we solve these problems along with the issues that has been happening with the SSCs and taxpayers. So we'll just start with the definition. What exactly is GST refund? So the GST refund is basically claiming of excess GST inputs that is lying in your GST credit ledger. And in case if you have made some excess payment by mistake or by any terms, in that case, how do we get that money back in our account? This is the process of GST refund. So going back to the theory part, like what is GST refund? To simplify the process of GST refund, the tax authorities have translated it into online process, and this process has to be completed within 2 years from the relevant date. That is, whenever you're filing a tax returns, the due date plus 2 years has to be your timeline to claim the GST refund. To at least make the application for GST refund. And with this, we will go to the next part, that is, what is the timeline? So there are certain criteria and categories where the timeline may differ and the uh, process and the payment, like in different scenarios. So if in case you have made an excess payment of GST, in that case, 2 years from the date of payment should be the timeline for claiming such refunds. And in case you have accumulated input credit and you have export or maybe exempt sales, in that case it becomes relevant from the first period of tax return. That is, for example, if you are filing your return from April onwards, this is the first month, April 22, that you have filed your return. In that case, April 22 plus 2 years, that is March 24, becomes your timeline to claim that refund. In case you have made excess payment in the provisional assessment, in that case, 2 years from the date of relevant payment date is the timeline. And in case you are making export sales with tax payments, in that case, in terms of goods, the date of dispatch or loading should be the date of consideration over here. So this date plus 2 years should be the timeline to claim the refund. Then we move on to the next part, like what is the eligibility and refund criteria where you are actually eligible for taking the credits, encashing the credits. So the majority, I think, is the refund of unutilized ITC on exports without payment of taxes. That this means in exports, like in GST, there are two kind of export sales. One is where you make the tax payments. Okay, you pay the taxes from your pocket and you export like goods or services. And the other one is where you export goods and services and you do not charge any taxes, and you also need to have a LUT, letter of undertaking, for that. In that case, you are 100% eligible to get the refund claim, but that will obviously depend on the calculations of your adjusted total turnover. That we will talk about in the later half of the session. Then we have refund of tax paid. on export of services with tax payment. So the second criteria that we were talking about, export of services or goods with tax payment, where you do not have a LUT and you're making the payments of taxes either from your pocket or you're charging from your client, and then you take a refund for that. The third one is refund of unutilized ITC on account of supplies made to SEZ and SEZ developers without tax payment. Similar to export, it is on the same criteria, and like export without tax payment, and similar to export with tax payment, we have the fourth point, refund of tax paid on supplies made to SEZ and SEZ developer with payment of taxes. Then the most like questioned area is about the inverted tax structure, where like the tax structure is such a way that your output is of the higher rate, that is 18% or 28%, but sorry, your input is on the higher percentage, that is 18 or 28%, but your output, that the services that you're providing, you're charging 5% or 12% on that. This means there's a gap between your output and input. So suppose somebody who's taking a service from like a vendor, and the vendor is charging them 18% or 28%, and then they are providing services, they are like making some changes and providing the services to their customers, where they are eligible to charge the customers at 5%. In that case, they accumulate a lot of GST. In that case, it is called inverted tax structure, where the tax structure is such a way that you pay the vendors more via GST, and you charge your customers lesser in GST. In such cases, you can utilize the ITC for refund. Then refund to suppliers of tax paid on deemed export supplies, refund to recipient of tax paid on deemed export supplies. Then if there is any excess payment made by you, in that case, you can use your ECL, that is electronic credit cash ledger, to get your refund. In case you have made additional payment of some taxes by mistake, or maybe you are putting some balance, in that case also you can take the refund. Refund of tax paid on intra-state supplies, which is subsequently held to be interstate supply, and vice versa. Then refund of on account of assessment or provisional assessment, appeal, or any other order. Refund on any other grounds or any other reasons. Refund on as per section 54 subsection 2 of CGST Act. So basically what we understand and what we see in the market is, like, there are few categories wherein your tax input tax is either higher, or you're accumulating a lot of taxes and you're actually eligible for refund, but they are unaware about it. But people who are actually doing export, they like, how much is the eligibility is for them, like what is the time lines for them, they do not know it. So we are going to move ahead, and we are going to help you with why our GST refunds can be rejected and how do we avoid such rejections. So the first major rejection like that you can get is non-disclosure of relevant information. That is, you do not provide your documents properly, or maybe you're not very clear about like while applying your application, you're not very sure about how things has to be done. The second thing is, which majority of the taxpayers are not aware about, that is time barred. So as we spoke about it in the first part of the session, that is, the timelines are very important. So the GST refund has to be filed within a proper timeline, that is 2 years from the date of their eligibility. So suppose if somebody has filed their return for April 22 or April 23 in May, it should not be considered from May onwards. It should be considered for April onwards. So your timeline for taking that claim is April plus 2 years. That is for March 23, April 23, it becomes March 25. It has to be applied, the GST refund application has to be applied within March 25. Then the major reason that comes in is the show cause notice replies. So in case like you have made an application, your officer will go on and he will issue a show cause notice, in which they might question you with some more documents, or they might question you with your physical presence at the office, or they might need some clarification. Those replies has to be submitted within timelines. The timelines is 7 days, and it may differ to 7 to 15 days. But we have to be very proactive, and we have to be very like repliant to the client, like the officers, and we have to like make the replies within the due time. Then refund filed under wrong head. So there are cases where the SSCs have filed their refund in like wrong scenarios. So suppose if somebody is actually exporting without tax payments, they have chose others because they are not very sure about the criteria that has to be filed with, and they have gone through it and they have got their rejection because of filing under wrong head. In that case, this might happen. Then there is a admissible like, so if somebody is claiming refund which is not actually eligible for claiming also, in that case the refund can be rejected. In case the calculations of refund amount is incorrect, in that case also you can get your refund rejected. Then there is a issuance of multiple deficiency memos. So what is deficiency memo, we'll go through in the like next half of the session. But a deficiency memo is basically a reply from the like officers that your application is incomplete and you need to refile it. But in case you are filing it like more and more times and you're getting the same response, in that case the officer has the right to reject your application, and instead of filing deficiency memo, that means they will give you 2 or 3 chances. And if you do not understand the issues and you do not provide the proper documents or things that they want, in that case they have the right to reject your application. And how do we avoid such applications, like how do we avoid such rejections? In that case, like you need to have your calculations proper. You need to apply your GST refund properly by submitting all the relevant documents. And then there is like you can reply to your show cause notice within the timelines. And then you have to be aware that while you file your GST refunds, your GST returns that you file monthly or quarterly has to be updated. That is, you do not have to be like, you cannot have a lag of like more than one return. Okay. In case you're filing for like suppose March 23, your return has to be filed. In fact, your current returns till date should be filed. In case you have not filed your return or the current dates, and you are applying for a refund of a previous date, then the rejection can be done. Okay. Then in case if your rejection is done on wrong like grounds, or maybe wrong merits or wrong reasons, if the officer has not given you proper reasons why they have rejected your refund, in that case you can go for appeal to the higher authorities. But there are certain queries with regards to the SSCs. What is the difference between deficiency memo and like rejections? So deficiency memo is basically another chance given by the officer to you to file your returns with proper documents. And in case there is some information or detail missing, in that case you are given another opportunity to file a fresh application and apply for the refund again. But rejection, on the other hand, is different. That is, it is a final order. It is a final order given to you, to the SSC, stating that whatever you have claimed is not eligible, or whatever you have provided to us is not correct. In that case, you have, like in case you find that the officer has taken the wrong reasons to reject your claim, in that case you can go for appeal. like the appeal application has to be filed within the timeline of 30 days from the rejection date of the application. Obviously, the appeal can be requested for early hearing or maybe a later hearing, but the application has to be done prior to the appeal. What is like the documents required for initiating a GST refund? So we have taken an example in case of export without payment of taxes, which is like covering the 90% reasons why people are going for GST refunds. In those cases, we have a list of 8 documents that is required from the SSC that the SSC has to submit to the officer along with the application. So what are the 8 documents? We'll just state it and we will just try to define how do we like go through it. So the first document is statement 3 and second document is statement 3A. So while you make a GST refund application, these 2 documents are actually not worthy to be attached, but this is a specific requirements from the officers and they want in PDF format these documents. So what is statement 3? Statement 3 is basically the details of all the export sales that you have done for the period of application of refund, along with the tagged with the FIRC. The same form you need to also fill in while you create a JSON file, which I'll show you in the coming part. So while filing the return, you need to fill a form statement 3 and also you need to prepare a form statement 3 in PDF format. In that, you need to tag all the sales along with the FIRCs, relevant FIRCs. That is, what is FIRC? FIRC is basically like certificate given to you by the bank when your customer makes the payment from the foreign country. So whatever transactions is happening between you and like the service receiver in terms of services, the only proof that you can provide that you are exporting actually services is FIRC. In FIRC, all the details of the customer, all the details of the transactions that has happened is mentioned, and it is provided by the bank. The bank certifies that this particular amount has been received by ABC and it has been paid by XYZ to the SSC. So that becomes very relevant in terms of services. But when it comes to goods, there are other documents, that is shipping document, port documents and BRC codes. Okay. So you can provide those documents. But in case of services, FIRC is the only option how we can prove that we are actually exporting good services. Statement 3A, on the other hand, is a summary of all this export as well as the adjusted total turnover for that particular period. And it states how much ITC you can avail for refund. So basically, you can say that how do we calculate GST refund which is eligible? So suppose there is an SSC XYZ. They are into 90% export, and they have accumulated around like what 1 CR for a tax period April 22 to March 23. So what is the eligibility for like refund? How much refund then they can claim? In that case, we can say 90% because we know that 90% is there. But what is the formula? The formula should be export by total adjusted turnover, that is the total turnover. The export turnover divided by total turnover, that is in proportion of 90%, multiplied with the ITC availed or claimed during that tax period, that is 1 CR. So in that case, 90 lakhs is the eligible amount for refund. So that calculation has to be attached on the refund application. That is in the format of 3A, statement 3A. Then we have to attach all the documents, that is FIRC copies. So whatever FIRC like you have mentioned in the statement 3, all the copies has to be provided to the officer along with the sales invoices. So statement 3 is a summary of FIRC copies and sales invoices with all the details, and FIRC copies and sales invoices has to be provided along with it. Then we have to provide the GSTR2A copies. So GSTR2A for the relevant period, that is April 22 to March 23, you need to download all the GSTR2A. You need to attach all the 2A in one file, and you need to submit it to the department. They will verify the inputs from 2A. Then there are a few declarations. There are around 6 declarations under different laws of GST, of which like there are a few verifications and self-declarations which states that you're not providing services in export and you're not charging the clients. So sorry, you are providing services, export services, and you're not charging your clients 1.5 times of what it should be charged in domestic sales. Suppose if somebody is charging 100 rupees for a service in India, they should not be charging more than 150 rupees when they are actually doing the same services, exporting the same services in like other countries. There is a declaration about that, and there is a declaration that like you have not made any defaults, and in case if you have made any defaults, you're liable to make the tax, like you are liable to pay the taxes along with the interest and penalty. In such a way, there are like 6 or 7 declarations which you need to submit. And then there is a letter of undertaking in case, like as I've already mentioned, that in case you are exporting without payment of taxes, LUT is mandatory. So what is LUT? LUT is a like declaration that you give to the GST department that you're like you're not going to provide like similar to declarations that we are talking about, that you're not going to make any service outside like India. You're not charging any service outside India more than 1.5 times, and in case you are at default, you will pay 18% taxes or maybe 28% taxes as per the applicability of the nature of business. And this declarations has to be submitted before the start of a financial year. So on the portal, GST portal, there is an option where you can go and file your LUT, but that has to be done before you start the financial year. That is for 31st, for a financial year 22-23, the LUT should have been filed by 31st March 22. In case you have taken a registration in the mid-year, in that case, before you raise your first invoice, you need to procure the LUT. But LUT is very much mandatory in case of export without payment of taxes, because if you do not have a LUT, you don't stand a point of taking a refund of ITC before that, and in fact you will have to pay taxes on the export in case you have missed out having the LUT. So there is a case study where the SSE has claimed for the refund without payment of taxes, and they have not procured the LUT. In that case, the department has rejected their appeal, like their application, and instead of like making the payment to them, they have charged the SSE, stating that you have like you should have been paying the taxes on export, and then you should have gone for the refund, and you have not done it, so you need to pay the taxes. 18% on the service that you have like considered for export, the whole amount has to be paid to the department. But any which way, after making such payment, you can again go for the refund. But if you're not going for that blocking of your funds, I would suggest that you make sure that you file your LUT way before like the financial year starts. Then the 8th document is Annexure B. Annexure B is basically a summary, a detailed summary of inputs that you have availed and for which you are actually taking the refund from the department. And that has to be reconciled with GSTR2A, and you have to give a declarations in another column that this amount is not like available on the 2A, or it is available on 2A or not. And all the details has to be given with HSN codes. So if there is any service code, you need to provide a service code for that particular transaction for which you are availing that input. And in case you have made any you have purchased any capital goods or any kind of other asset, then you need to provide the details over there via HSN or SSC. So what are the different like forms in GST refund? So in GST refund, there are like 10 forms, 10 different forms, which they like speak with the codes only. So RFD1 is basically application of GST refund. RFD01W is withdrawal of that application. And then there is, so suppose if SSC has made an application, in that case, the assessing officer, the officer who is in charge to like accept the application, he has to accept that application. He has to acknowledge that application within 15 days via RFD02. In case the application is not like accepted within 15 working days, in that case, they like the assessee can follow up with the officer, obviously, and they can also raise a point in the grievance via GST portal. Then there is RFD03, that is deficiency memo. In case the officer find any deficiencies regarding documents, or there is a like incomplete application, or there is any document missing, information missing, in that case, the officer may give another chance to the applicant to file their application again with a like fresh start. Then there is RFD04. In case the officer has not issued RFD03, they are actually going to get the refund or maybe rejection, either of the two things. And in case the refund is eligible and everything is done, the officer may give you RFD04. That means 90% of your refund will be sanctioned, and the rest 10% will be sanctioned in some time, like 60 days from the first like RFD04. So there is a timeline that the application has to be submitted, and then the application has to be accepted by the officer within 15 days. Then within some time, the officer has to reply to the SSC stating that either giving a final order, that is either rejection, or maybe RFD04 stating that 90% of the refund will be sanctioned, and the rest 10% will be sanctioned only after final order has been passed. So the gap between RFD04 and RFD06 can be of 60 days or more. Then we have like RFD05, that is the final order, and after which the RFD06 comes in, sanction or rejection order, which is passed by the officer. That is the final orders the post method. And there is RFD07 as well. In case the officer has given you a sanction order, in that case, the officer has the right to hold your tax refund via RFD07. If there is any discrepancy found in the like letter or maybe in the documents after the sanction of order, the officer has the right to hold your refund via RFD07. And the officer might also go for RFD08, that is show cause notice. So it's not like this process has to be in the numbers written over here. It can be in any manner. So RFD01, and then there can be RFD02. Obviously 1 and 2 will be in the like numbering basis only. Then there can be RFD08 or maybe RFD03 or RFD04 or RFD06, either of the anythings. If RFD08 is passed, that is seeking for clarification, in that case, the SSC has to reply via RFD09 within 15 days. And as I mentioned, it can be between 7 to 15 days. So once your RFD 08 is sanctioned, that is, if they're asking for some documents or some more clarification, in that case, the SSC has to reply within 15 days via RFD 09. And this whole process can be done online. Nothing has to be done like in physical manner. You do not have to visit departments for all these things. But if you need any clarification from the officer, in case you're not very clear what the officer wants, you can obviously go and visit the officer, and you can seek confirmation what exactly is the requirement. Then, like, what is the best way one can plan their GST refunds? So, like, it's not about just application; it's also before the application. So, what are the things? So, the first thing that we can say that is documentation. All the documents, it has to be very much specific. It has to be like self-explanatory. So if you're providing a statement 3 and you're not writing a number of FIRC, the FIRC document has to be there. It has to be properly mentioned. It has to be properly like filed along with the application. In such a way, there are other statement declarations, uh, like calculations. Everything has to be prepared in a proper manner, and everything has to be documented. It should not be like it should be done, just done. It has to be, there has to be a proper process of doing everything, right? In that case, documentation is very much important. Frequency. So earlier there was an issue in the GST portal when the GST was like brought in, that you can only file a refund on monthly basis. You cannot file for multiple periods. So suppose if GST return was like started in July 2017, in that case, somebody who's going to file for 17-18, they must file it in a way like July 1st, then August, and then so on, but in monthly basis. And because of which a lot of SSCs have faced these issues, that in the months where there is no export turnover, they're not actually getting the refunds. But coming over to the next few like months and the financial year, the government has understood this issue, and they have given the assessor an option where they can file their refund in club manner. So they can file their return in club manner via like for quarterly, maybe, or 6 months, or maybe 9 months, or maybe 2 months, 3 months, in the manner they want to file their return, but within a financial year only. Suppose if somebody who was trying to file their return for July 17, and they waited for like 2 years to end, and then like just before the 2 year ended, the time barred limitation has ended, they have filed for their return, and they have filed for the whole 9 months in one go. In that case, they are not facing issues. But when it comes to people who have no export sales in July or August, and then they have filed for September, in that case, their July and August like inputs are all gone. So this frequency part is very much important. You need to understand how and like what is the period for which you have to file the refund application, and how do you claim it is very much important. Then the time limitations, that is, as I already spoke about, 2 years is the relevant time, and you should file your refund application within 2 years from the specified periods. Then like obviously there, as we mentioned, that if there is any confirmation that the officer or the maybe department seeks from your end, you need to be very much proactive, and you need to reply to them within the due time. In case you're not like replying to the department properly, the department can reject your refund applications along with the documents. Obviously, in case they ask for documents, you need to clarify that. So this all has to be planned properly in such a way that these things do not happen, and this does not result in rejection of the application. So like there is a pictorial like description, like demonstration that we are going to give with some verbal explanation. So this is the application form that looks from the initial stage. There are a few options given to the SSEs where the SSE can select what heads they want to file their return with. So as we have already mentioned, how we should file for export of goods and services without payment of taxes. We have taken the same example and we have shown the application. So we create a refund application. We select the period over here and the month. Now there is a different option, and we can select from to till. Also, we can select the year and month tax period. We can club it, and then we can create a refund application. Then, as we were speaking about statement 3. So statement 3, there are two things. One, we have to prepare the PDF and we have to attach the document in the application. Then there is like a form which has to be filled in, and we have to create a JSON file, and we have to upload it over here in the statement 3 column. Click here to upload. How do we download this form? The download option is already here for the utility. We need to fill in this document, this utility, and we need to create the JSON file over here. In this document, what all are required is similar to statement 3 that we have prepared in PDF format. So what are the documents? The documents is obviously the sales documents, that is document details, type of document, debit note, invoice or credit note, the number, the dates, the values, what is it, goods or services, like whatever we're selling. In case it is goods, we need to fill in the details of shipping bill. In case it is service, we have to give the details for FIRC codes over here. And after filling in this form, we can create the JSON file and we can upload it on the portal. Once this is done, statement 3 is done, we have to fill in the details of statement 3A, which we have already mentioned that you have to submit the PDF also. The similar calculation has to be done over here as well. So what is turnover of zero rated sales? Turnover of zero rated sales means export sales for that particular period, that you have to put in column 1. Then there is adjusted total turnover. That is the total turnover, that is domestic plus export. So obviously your domestics, if you are not involved in domestic, it has to be same. But in case you're involved in domestic sales as well, in that case, it might differ. In the proportion of the same, your refund amount claimable is calculated. So during that period, you have claimed around something 272, and this 272 input has to be put in this calculation. And according to this the calculation and in the percentage, the maximum amount of refund to be claimed is calculated automatically. Once this is calculated, you need to put in this details over here in the refund to be claimed section, where you will have to define from which tax heads you want the refunds you're actually taking the refunds from. This will be this cannot be determined by you. This has to be determined on the basis of what inputs you have claimed, IGST, CGST or SGST in that tax period. Suppose you have claimed 100 rupees in 0 rupees in IGST during that tax period, so you cannot claim anything. In our case also, it's similar. SSC has not claimed anything. It's similar. Then we have to fill in the details of where we want the credit, that is the bank account number. And along with that, we have to upload all the documents, that 8 documents which we mentioned in the slides. We have to upload the documents over here. This is how we complete the filings. Then I would discuss few issues that and the difficulties that the taxpayers face. So there are some queries that come in very frequently. What is time barred? So time barred, as I already mentioned multiple times, it is a time limit of 2 years from the specified period. So for every different scenarios, 2 years is the maximum limit. within which you have to apply for the refund, or you won't be eligible for the refund. And if you like apply for the application of a refund beyond this 2 years, then it is called time barred. Then what, like the maximum reasons why this refund rejection is rejected is because of like fake documents, or maybe ineligible claim of inputs that the SSCs submit, or maybe claim by mistake. Yeah, like suppose if somebody is involved in IT sector and they have claimed for insurance of a car, or like input on insurance of car, or maybe something which is not eligible for our input claim also. In that case, the department might reject the applications. I am not saying that it is the 100% reason why this is done, but majority, if you are claiming those refunds, in that case, you are not even eligible for the claiming of refunds. In that case, the officer might reject your application also. What in case a partial amount is sanctioned? So this happens a lot of time with like a lot of people. So if suppose in GSTR 2A, some inputs are not reflecting, but you have claimed it and you have like applied for the refund, and the department has said that maximum we can approve is like 99 or 95% of the amount, because the 5% is not reflecting in 2A. In that case, like you can like file one return, that is PMT03. Once you get the final order of the refund sanction, the refund is sanctioned at 95% and it has been credited to your account, then you have an option of PMT03. PMT03 is basically a form wherein you file a return and you get the amount back into your ECL, that is electronic credit ledger. So suppose if SSC has filed for say 1 CR input claim refund, and he was sanctioned 95 lakhs basis of 2A or maybe some other reasons, then in that case, if they see that they are eligible for this refund and they are not going for further appeal, then they can request the department via PMT03 to get this 5 lakhs, remaining 5 lakhs back into their electronic credit ledger by filing PMT03. But once you file PMT03, you cannot go for further appeal. That is, you cannot challenge the department for further like seeking of refund. That is, if you want that, you want the credits in your account and then you want to go for appeal, or maybe argue with the argue in legal ways with the department to give you the refund for 5 lakh rupees also, then it is not possible. PMT03 is basically moving back your credits to your ECL, but also accepting that you are not going to go for any other appeal. So, as we have already mentioned, like what is the reason why we should go for appeal? In case you find that your officer has rejected your refunds on wrong grounds, or maybe you have some other or maybe some on grounds of something, and you have a proper argument, case study reference to help you with, in that case you can go for appeal against the order that has been passed by the officer, but that has to be done within 1 month. The appeal application has to be done within 1 month of such rejection. Minimum limit for application of refund. So there is a limit for filing of GST refund, and the minimum limit is 1,000 rupees. So you cannot claim any GST refunds for less than 1,000 rupees. How is deficiency memo different from rejected applications? Okay, so deficiency memo, as I mentioned, is another chance given to you by the officer to file a fresh application with all the documents which were not present or which are incomplete, and it is not a rejection. Basically, it is not a final order. It is basically another chance. But in case of rejection, it is a final order that has been passed after a detailed audit or maybe a scrutiny of all the documents that you have shared, and in that case if the officer rejects your application on the basis of time barred, maybe documents, or maybe eligibility criteria, in that case, the officer may reject the application, and you do not have any other option other than appeal to defend your case. You cannot go for any other fresh application once your application is rejected by the officer. And how can Tax Mantra help you? So, like a lot of our clients have availed our services for GST refund, and we have been 100% successful as of now in getting their claims. And in case they have like got any rejections, we have also gone for appeal, and we have helped them in getting their appeal like 100% right, and we have got their refunds from there as well. So Tax Mantra will help you in scrutinize your documents and GST returns and transactions. That is, whatever you have filed, we will help you with like scrutinize that and audit that, and we will help you to accumulate all the documents and prepare a calculation, and the department, like whatever working papers are required to be submitted to the department, we will prepare that, and we will help you with the application also. And in case there is a requirement for representing you, or like the SSCs will obviously help you with that as well. So I would like suggest that in case you are having any issues, please try to reach us for all the queries that you have regarding GST refunds. The mentioned are the numbers and email ID to reach us. Thank you. And we'll just see if there is any questions, any queries from the